All right. This is M2 growth, and it's a 4-year annualized percent change. So from March this month to March, or this past March to March 4 years ago, what is the monetary growth rate at an annual rate? That would be the last data point here, which is you can see the black dash line. So that rate is about 8%. And actually, probably it's closer to 6%. There's a lot of data on this chart. But take a look at the 4-year growth rate of M2. And you can see it's all over the place. You can see in the 60s and 70s, it moved toward double digits, and we ended up with double-digit inflation in the late 70s, early 80s. It took a while to get there, and it seemed to be very sticky.
Don't forget to subscribe, traders. Let's continue with the interview to analyze it later and also comment on some of the most important news of the day. The analysis of the M2 growth rate reveals significant historical fluctuations, with current levels hovering around 6 to 8%. This rate of growth plays a crucial role in influencing inflation rates. By examining historical data, we observe that varying M2 growth rates have, at times, led to periods of double-digit inflation. Understanding these patterns is essential for grasping how changes in the M2 growth rate can have far-reaching effects on the economy. The current rate, while moderate compared to past extremes, still holds substantial implications for inflation and economic stability. Historically, when the M2 growth rate has spiked, the economy often experienced high inflation, underscoring the critical link between money supply growth and inflationary pressures. This historical context highlights the importance of monitoring M2 growth as a key indicator for predicting and managing inflation trends.
Very exciting times for Bitcoin. As we know, Bitcoin just underwent its fourth monetary policy halving, and ARK has been a part of 3 of those halvings. Crazy to think about.
Yeah.
Dropping from a 1.8% issuance rate to a now 0.9% issuance rate, which for the first time in Bitcoin's history is now below gold's issuance rate. So just to level set on what the Bitcoin halving is, it occurs roughly every 4 years, and it really is an elegant reminder of Bitcoin's predictable monetary policy and its role as a scarce asset. So Bitcoin has a coded, mathematically metered supply that's baked into the software's rules, where the reward for mining a block effectively gets cut in half every 210,000 blocks, or roughly every 4 years. The first halving occurred in November of 2012, where the block reward was reduced from 50 Bitcoin to 25 Bitcoin. And this most recent halving has reduced the block reward from 6.25 Bitcoin to 3.125 Bitcoin per block. So as you can see in the chart, that issuance rate.
The recent Bitcoin halving event has brought about significant changes in the cryptocurrency landscape, especially concerning its issuance rate. For the first time in its history, Bitcoin's issuance rate has fallen below that of gold. This reduction highlights Bitcoin's growing scarcity, a crucial aspect that distinguishes it from other assets. Bitcoin halving is an event that occurs every 4 years, systematically reducing the rewards miners receive for processing transactions by half. This process directly impacts the supply dynamics of Bitcoin. By decreasing the rate at which new Bitcoins are introduced into circulation, the halving event exerts a deflationary pressure on the currency. As the supply growth slows down, the scarcity of Bitcoin is accentuated, which can influence its value and appeal as a store of value. This cyclical reduction in block rewards underscores the unique and deliberate scarcity embedded within Bitcoin's protocol, positioning it as a digital counterpart to precious metals like gold, but with an even more stringent supply control mechanism.
Has gotten cut to below 1%, and the green line is Bitcoin's circulating supply, which is roughly 19.5 million of the total 21 million. So over 90% of Bitcoin supply has already been issued. From a price action standpoint, the Bitcoin halving tends to coincide with bull markets. So Bitcoin's now trading at roughly $60,000, and it's gone through a pretty nice reset after making all-time highs in March. And so we like to look at just healthy resets, healthy liquidations on the longs, especially during a bull market. And we've seen a 22% drawdown from the all-time highs, which tends to coincide with what we've seen in previous bull markets as kind of local corrections.
Of course, in emerging markets, anyone with a connection to the internet now pretty much can establish or buy an insurance policy in the form of Bitcoin, which, just flipping back to the halving in this purple line, doesn't look anything like the volatility you see in monetary policy here in the United States and around the world. And of course, it's controlled by human beings. When we went off the gold exchange standard and closed the gold window in the United States in 1971, monetary policy just became unhinged, and it has been unhinged ever since, although human beings have tried to contain the inflationary ramifications, and they take it too far both ways. And right now, we think they're taking it too far on the downside.
In 1971, the United States abandoned the gold exchange standard, a move that profoundly changed the landscape of monetary policy. This departure meant that the value of money was no longer tied to gold reserves, thereby allowing for greater flexibility but also increasing the potential for human error and subjective decision-making in the control of the nation's money supply. Since then, monetary policy has been characterized by a series of adjustments and interventions aimed at managing the economy, often influenced by the prevailing economic theories and the judgments of policymakers. In the contemporary financial world, Bitcoin has emerged as a significant player, often viewed as a digital counterpart to gold. Recently, Bitcoin has demonstrated strong bullish sentiment, evidenced by a remarkable price increase. From last week's lows, Bitcoin has surged by $8,000, indicating a robust recovery and growing investor confidence, even during typically slower trading periods over the weekend. This performance highlights the dynamic and often unpredictable nature of cryptocurrency markets, contrasting sharply with the historical stability that the gold standard once provided.